How are we doing, everybody? Stephen Palmieri coming to you this amazing day, multi streaming all across the cyberverse. For those of you guys who know me, thank you for following me and joining me. For those of you guys who don't know me, my name is Stephen Palmieri, and my team and I work with folks just like you to help you fix your finances by raising your credit score, lowering your taxes, and improving your accounting processes. Today, we're going to talk about the benefits to you, business wise and tax wise, for being able to know your numbers in real time. Actually, met with a client today and reviewed their monthly financials with them and their tax planning, bookkeeping, accounting, full boat client. And business is about 3 years old and they're doing very well. And so part of the value of having good numbers and is being able to meet or know as a business owner, to be able to review your numbers in real time. A lot of times, what we see and what happens with small businesses is you just kind of let your accounting go behind. And then at the end of the year, you're scrambling to try to get those numbers together for your tax return. It's really a privilege to be able to put yourself and your business in a position to where you're doing those numbers monthly. But the benefit to you is that you're able to review those numbers and you are essentially running your business looking out of the front window instead of the rear view mirror. And I think a lot of you guys can relate to that. And so, this particular business, we're kind of projecting that all other things being equal, probably will end up making about a $2.5 million, net income after everything is said and done. Putting them, roughly somewhere probably 700,000 plus or minus in taxes that they would owe. Now, we're not getting into the minutia of tax details, tax planning, tax strategies here in this video. We're getting into just some basic concepts for you guys, right? The concepts of being able to have these kinds of decisions. And so, and there is no magic potion for tax strategies, right? There are a lot of things that can be done. It's important to understand, though, that things that you do for tax strategies, they take your attention. You have to adjust the movement of your money, and for high level tax strategies, that basically means, adjusting how you do business or, maybe even opening new businesses, right? So it's important to kind of look at it from the lens of, okay, as a small business owner, what can you do without removing your attention from what your real core competency and your core goal is. Okay. Now, this particular small business, they're leasing their facility right now. They're wanting to purchase a building. That's an amazing idea. Once they purchase a building, they will then realize some significant tax benefits at that point from depreciation. But for right now, that's still not happening, in the immediate future, probably not by the end of this year. Okay, so we've got a client. They're an S corporation, and they're probably going to make somewhere about $2.5 million net income by the end of the year, putting them probably somewhere flow through down to them personally owing about $700,000 or so, roughly, in taxes. So one thing that can be done, though, that does not distract them from their core competency, their core business model, and in fact, that adds to it, is you can find a way to help them shift some of that money from the 37% personal tax bracket where they would end up, highest tax bracket, all other things being equal, right? Down to a 21% tax bracket. And that would be, hey, let's go ahead and talk about, we still have half a year, open up a C corporation. And from your S corp, and of course, you've got to have the cash flow to sustain this, right? I mean, and in which this business does, but write an expense of $500,000 or $1 million from your S corp to your C corp. Now, this probably would be the C corp that would ultimately end up holding the property, to the point there, if you're able to shift that money from your S corp, which does not pay taxes, it would flow to you personally. And if you're doing well off like these folks, you'll be at the highest tax bracket of 37%. And you can move it and shift it to a C corporation, which is taxed at 21%. If you move $1 million from your S corp to a C corp, that is $1 million expense, $1 million reduction in profit, $1 million reduction in net income from your S corp, $1 million in reduction of what would flow through to you at the 37% tax rate. And you're putting it into this vehicle, a C corp, which would be taxed at 21%. So you go from essentially $1 million taxed theoretically at 370,000 down to 210,000, right? 37% to 21%. This could be done without really distracting them from their current business model. This C corp could have the business purpose of maybe doing some sort of management functions, kind of preparing them for getting the building. I mean, there's legitimate things that you can do with this type of a structure. Okay. There's all sorts of things that can be done outside of this, right? I mean, there's things that can be done to reduce on the personal level taxes even more. That's not what this video is about. This video is about being practical, providing practical suggestions to business owners that are in alignment with what they're trying to do to further their business and that don't necessarily distract them from where they are right now. And so it's something that's in the talks, right? We've still got a half a year left at this point in time, plenty of time to make some decisions. But, again, none of this would be possible if we didn't have a good finger on the pulse of the financials of this business. And so by having good, timely financials and having a team like us on your team, where we can meet with you, we can review these things, and then we can forecast out and we can help you to figure out how to write a little bit of a smaller check to the IRS and at least set expectations. Again, you're looking out the front window instead of the back window with this type of a management style. And so that being said, I wanted to share this with you. A lot of small business owners watch my videos and follow me. And again, you've kind of got to put yourself in a position to where your business is doing well, right? Because if you don't have the extra cash flow, there's not a whole lot that you can do tax wise, right? Because your business is generating cash flow, it's flowing down to you personally, and you're living off of that money, right? Nothing wrong with that. That's just kind of the way that it goes. Once your business escalates to a level where you've got, excess capital, sufficient cash flow, then you can figure out how to start to do more strategic things of this nature. So that being said, hopefully you can take this information and do something positive with it. And I want you guys all to remember one final thing before we end this broadcast. Fix your finances and improve your life. I appreciate you guys all for following me. If there's anything in here that I can help you out with, feel free to reach out to my team and I. Drop me a comment below. Email me, Stephen@StephenPalmieri.com, and I will see all of you on the next video. You all take care.